All right, you know what? We better cover this right off the bat. I don't know about you folks, but I find these presentations a bit dry. So I've done everything in my power to liven this one up. So we'll have some nice visuals, but the way to make this thing really valuable is to make it as interactive as possible. Granted, we don't have the luxury of sitting together in a room and talking, but you know, we'll do our best. So I'm not kidding. It's, you know, like I said, it's not death by PowerPoint here, folks. This is an opportunity to actually interact. I've been in this business now over 5 years. I've learned a lot, and I'm more than happy to share what I've learned. And, you know, you may agree with it or not, but at least it'll be an interesting conversation. Okay, so with that, I'm going to dive in. I'm sure, again, since you've been on these presentations before, you've seen the disclaimer. I've put in red, in my opinion, the most important sentence in the whole disclaimer. Again, I've been working with consumers for a long time now, and I've had people mortgage their home a second time to get their refund their trading account. They have spent all of their children's college fund. I mean, it's just insane. So remember, please do not trade with money that you cannot afford to lose. All right. So a little bit about Indicator Warehouse then, because as I said, we've been around now over 5 years. And we have a very unique business model. You can kind of get the idea from the name Indicator Warehouse. When I started out, there were probably about 20 other NinjaTrader partners in the industry. Now there's over 500. And I'm proud to say that Indicator Warehouse is still one of the top leaders. And what makes us unique is that we don't write any of the stuff that we sell. My idea when I first got into this industry was to work with a lot of the NinjaScript programmers that I'd met while I was trying to be a retail day trader. And they were your typical programmers in that they had brilliant ideas and amazing tools for, you know, for the general public, but they really weren't, let's say, set for running a business and interacting with the general public, et cetera. So I called them up and basically said, why don't you let me sell your stuff for you? And that's how Indicator Warehouse was born way back in 2009. And for a long time, we were basically a Home Depot of day trading tools, for lack of a better term. But there's things that, that we've learned along the way, and we've evolved as a business really beyond this idea of just being an indicator shop. And we've become more of a full-blown solution. And this has primarily come from feedback from working with clients and just finding out what our customers really needed. And so it turns out that it's much more than just being able to get a bunch of free indicators and throw them on their charts. A full solution involves something more than that. So that's what we're going to cover today. You may already have a day trading system. That's great. Or you're in the process of building one and possibly even buying one. So my objective today is to be a resource to you if you have any questions, and also just tell you the best practices that we've learned along the way from feedback from our customers. Okay, so if there's two things that you walk away from this presentation, it's that your trading solution should focus on two primary components: trading accuracy and account protection. And when I say accuracy, I don't mean these silly marketing claims you hear from people. This is a 90% accurate signal. That's ridiculous. I'm talking about an accurate trading system, which involves much more than just the signal, and we'll go into that. And the second, which is for some reason the least talked about in the retail space, however, the most talked about in the commercial space, is account protection. And you talk to any hedge fund manager today, and they'll tell you that it's all about capital preservation. You won't hear any of them talking about profit targets and swinging for the fences and how much money I can make overnight and get rich quick. None of that silly stuff that sadly we hear a lot in the retail space. It's all about risk management and capital preservation. In other words, be around to trade another day. So here's one of my heroes, Paul Tudor Jones. Brilliant guy, and what I love here is where you want to be is always in control, never wishing or hoping, always trading, and always first and foremost protecting your butt, or as I like to say, protecting your assets, with an emphasis on the first three letters of that word. So I will be drilling this over and over again as we start talking about your systems you may be building and or buying. the two key components to look for and to act as a litmus for your own trading is the accuracy and how well it protects your assets. So what are some lessons that we've learned along the way? Well, one of them is, and no offense to all you big micers out there or elite traders, but these forums that are out there that are claimed to be, you know, free places to get a lot of trading tools, they can be a dangerous place to be. And so I don't know if you all have had this experience before, but free is not always the way to go because there's no quality control, there's no support. And what we've learned over time is that it's more about the support on how to use the tools than the actual tools themselves. And so the reason we've been so successful in this industry is not because we've come up with some magical trading signal that's better than anybody else's. It's because we've designed software tools that enable people who can trade to trade better. And that, in my opinion, is the reason why software exists. Almost anything we talk about today, you could do yourself. Heck, you could trade without NinjaTrader if you wanted to, but it would be incredibly tedious and difficult, and you for sure would not be as successful as if you were using good third-party add-ons. So what do you think is critical for a trading solution? Great. Price, accurate entry, accurate signals, and money management. Anything else? All right, here's the list. And I'm telling you that if your system or solution doesn't have all of these bullets, you are not set up for the most success possible. And so we already talked about accuracy. Thank you, Tim. Here's an interesting one. The ability to trade in multiple market conditions. So many systems out there have been optimized to trade in only one type of market condition, and anyone who's been doing this for a while knows that the market just doesn't sit still in one condition. It moves back and forth through long-term and mid-term and even short-term trades. And so you have to have a system or a solution that enables you to be flexible enough to trade in those different conditions. Account protection, right? That's the boring part of the equation, but probably the most important. And by that I mean risk management, making sure that you are not getting into a position in which you are overcapitalized or undercapitalized. So many people I deal with are these one contract traders, and they don't have the flexibility of trading with multiple contracts such that they can leave a runner in play and take advantage of the rare but very profitable trending moves. Mechanical trade management. Anyone know what I mean by that? Right. So that is the ability to trail your stops mechanically so that you are not sitting there nailed to your screen, moving it one at a time manually, and basically that will drive you nuts. And so having the ability to automatically move your stops to protect your profit is critical. The next one, scanning for trending markets. If you're just a futures trader, probably not as critical, right? I mean, the average future trader trades, what, 2, 3, maybe 4 markets. If you start moving into the equities arena or the foreign currency, then you really need the ability to quickly and easily spot where the best opportunity is for trading. Forecast upcoming events or trading conditions. The idea here is that everybody knows that indicators are basically mathematical algorithms, and they are by design lagging. So anything that can give you some insight into what is going to happen is useful. And so there are ways to do that, and there are tools out there to help you with that. That's definitely part of the equation. I wouldn't completely rely on that, but again, it's part of the equation. And the last two is critical, especially if you're starting out, and that is education and an ability to try these tools out while you're using them in a real world environment with a teacher there to help you. And I hear this all the time, that people buy these tools and then they're kind of just thrown, out of the nest and into the fire. And so we're big believers that after you buy these tools, you also need to have a mentor, someone there to help you as you start to use these tools, because invariably the market's going to act wacky, and you'll never know if that's because something you're doing or it's something the tools are doing, or you know, you did everything right and it's the market just simply turned against you, as it happens. Having a mentor there is incredibly valuable to say, no, look, you did it all right. The market just acted wacky. So remember how I said we have the luxury of representing different programmers? It's wonderful because I don't have to worry about having any kind of pride of ownership of anything that we bring to the market. I get to work with brilliant traders and programmers, and over time, what we've learned is there are certain ones that really came to the forefront that were just considered incredibly valuable by our customer base, and they have helped our customers with that laundry list I showed you earlier in basically designing the ideal trading solution. So obviously you don't have to use ours, but we're going to go into these so you can understand what to look for in the marketplace, whether it's ours or, you know, some other vendors that are out there. So this is one of the key concepts that we actually brought to the market, and that is a diversified approach to trading and a diversified approach to signals. And this came from the concept, if anyone has a 401k and they manage their portfolio, how do you deal with risk, and how do you deal with protecting your assets when you're dealing with a portfolio? You diversify it so that at any point in time, some part of your portfolio is performing. So we took that concept and we said, okay, let's apply that down at the discretionary trading level and see if it plays out. And after 3 years now in the marketplace with this particular solution, it has absolutely proved itself out. And we'll go through this because this is key. This is one of the most powerful things that we have found from a trading solution that you can have, which is the flexibility to trade multiple market conditions. So we call this three-dimensional trading. And what it is 3 distinct systems, right? So it's not the same signal that's just been put on a higher time frame and on a lower time frame. Each one of these systems or signals was designed to identify a specific market condition. And this way you are basically prepared at any point in time to take advantage of whatever the market's doing. And I'll show you what I mean by that. Let's do a little test here. How often, in y'all's opinion, is the market in a trending condition? What percentage of the time? Tim says 20. Anybody else? 20, 25, 20. Excellent, excellent. All right, so clearly we don't have total newbies here. Yeah, 20. Now, and look at that beautiful trend chart. That happens to be our Eagle trend trading system. Now here, just for the fun of it, what percentage of the time do vendors show their systems in trending conditions when you're seeing all that marketing stuff out there? 80, 100, 100, right. So hopefully you're beginning to see now, here we have a condition in which it's only present about 20% of the time, but sadly it's presented to the general public about 100% of the time. All right, whoops, I shot ahead, I just gave away the answer. Range bound, and when I say range bound, if I have any market auction theory or market profile people in the room, I'm talking about the value area, right? How often does price stay within about a fixed range when you're trading? And the answer already is 70% of the time. So last one, and this is just simple math, we've already covered 90%. How often is the market primed or good for doing high volatility trading, or what some people call scalping? Well, that's obviously 10. Now, another trick question for you. What percentage would you say of vendors that are out there are touting scalping systems? Lyndon says 90%. Anyone else? Again, you start to see the problem here, and so I understand why people get really mad at vendors. Again, most people show their systems in a condition that's only around 20% of the time, and they're touting systems that really should only be used about 10% of the time, i.e. for scalping. And so when we came up with our solution, we designed it in direct contradiction to this. In other words, we knew that was ridiculous, and we wanted to create a solution, and I recommend this if you're building your own, to make sure that you have this kind of a ratio when you're putting together your own system. Now what this does is by having these three different systems running at the same time, I liken it to like a cockpit in a plane. You know, each of these dials tell you something different. Individually, I wouldn't fly the plane with any one of them, but altogether it enables you to take flight. And I'll show you what I mean by that. The market tends to move in and out of these different conditions, right? We know 70% of the time it's going to hang in the range-bound condition, and then the buyer's going to come in and they're going to try and boost the auction up. And if they break out of that range, what tends to happen? You tend to have an explosive trend about 20% of the time. And then our experience is that in between these different phases is when you see scalping opportunities pop up. This high volatility between the range-bound and trending changes. You'll see it kind of just kind of bounce back and forth, and those are the opportunities to grab a little bit. So example, and this is how a lot of our people use our solution. You may look to the Eagle or a trend trading system to define the bias of the market. And that's going to give you the direction. We don't ever fight the trend. Okay, I know there's counter trend traders out there. We don't fight it, right? And so once the trend is defined, and you may take a position and let it run, we'll talk about that in a minute, you can then more comfortably trade another position in using the range-bound system, right? And again, when it's aligned with the higher trend. And then if and only if, in our opinion, when you have a clear trend and the range-bound system is aligned with it, it makes sense to take some scalps, right? The idea of scalping without any kind of insight into what's going on in the market beyond that one condition of scalping, in my opinion, is like swinging a razor blade in the dark. You're going to get cut up, right? And so we believe that scalping is the least attractive of all the systems, and only to be used when a trend is clearly blasting in place. And again, sadly, a lot of other vendors use the opposite presentation. Okay, this is another what I would call unique component that if you can do this when you're building your own system, I recommend it. You know, it's very common. You'll see this, you know, what is it, green arrow, red arrow type approach. Feedback that we got was that by using this arrow type approach, people felt rushed to get into a position and chase the trade. And again, if you're building your own system, you don't want to just rely on one visual element to say, hey, you got to get in, because it doesn't give you enough time to think and analyze and make sure that this is what you want to do. What we did was each one of these systems have algorithms that need to align with each other in order to create a signal. And so as these algorithms line up, we get different visual elements on the chart. When one of the three elements is in play, you'll see a dot. When 2 out of 3 are in play, you'll see this triangle. And then when 3 out of 3 are present, that's actually, in our opinion, the time to get in. And so it looks, in our system, it looks something like this. So you'll get a warning dot right here. And then as the signal starts to develop, so you know, you're not rushed here at this point, right? You can take your time, say, okay, we may have a setup. There's an audible alert, however you want to design it, email, as it may be. And then 2 out of 3 of the elements of your system are in play or signal are in play. And then finally, if 3 out of 3 are there, you got ready, set, go, and it's time to get into your position. So by having a multi-layered approach to your signal, it gives you more time to breathe, and it doesn't make trading such a stressful endeavor. Okay, so let's go back to the ancillary tools that help beyond the signal, because in my opinion, an accurate signal is only about 10% of the equation. I know that everybody out there is seeking the perfect signal, and I'm telling you right now that if you have good money management, even a mediocre signal is going to make you money. So this is, you know, if we had to put on our sales marketing speak, this is the secret sauce. In my opinion, the automated money management and risk management is the most important part of any system. So even if you already have an accurate signal that you're working with, just adding quality money management to your solution is going to exponentially increase the value of your trading. In fact, hang on, let me find this tool. Give me 1 second. Here's a tool. When you have some time, go check that out. What I'm talking about is position sizing. And so position sizing, I mean, we could spend a whole hour on it, Position sizing is basically making sure that for each trade that you get in, you have the right number of contracts in play relative to the amount of risk that you can take against your account. And so if you've studied any Van Tharp, you know it's about 2% of your account. You should never trade more than 2% of your account. But depending on where you have your stop, that 2% may enable you to get in with 1 contract, 2, 3, 4, or even 5. As long as you have that constant risk, even with 5 contracts, you're not risking more than that fixed amount. And people that get this position sizing in their head and start to use it, these are the phone calls where I get and people just go, oh my God, this is the most amazing tool I've ever seen. And it is. This is the tool, you know, I'm sure you've heard this before, right? Cut your losses short, let your profits run. It's one of those wonderful things you read in books. Really hard to do, right? And so this is the tool that enables you to do it. So support and resistance lines. Who uses support and resistance here for their trading? Great. So this is interesting. So I live in Houston, Texas, first of all. And I was at my daughter's softball game the other day, and it turns out her coach is an energy trader, as we have a lot of here in Houston. And he is actually in charge of the algorithmic trading for the firm. And so we were just talking about, you know, comparing notes, because I live in the retail world, he lives in the commercial world. And it's interesting, you know, his team, support and resistance, is something that they take very seriously. And so it was neat to get a little bit of validation, you know, from the big players. The biggest difference, by the way, just if anyone's wondering, between the commercial players and us retail traders is they get to trade with other people's money. And that takes such a tremendous amount of pressure off of you when you're trading with other people's money. We don't have that luxury. And so that's all the more reason why we have to use accurate systems that protect our assets. It's our money. So again, there's a number of support and resistance providers out there, you know, ranging from services in which I think you pay on a monthly fee, you know, all the way to what we have, which is basically a standard indicator that has your lines or zones waiting for you when you fire up in the morning. But anyways, I'm a big believer in support and resistance, and so we call this an add-on. I wouldn't call this a core component to a trading system. The core component is making sure that you have a flexible signal that allows you to trade in multiple conditions and that you have good money management. Those, to me, are the core components of a solid trading system. These would be considered add-ons if you know, I think of it like an aftermarket on a car, right? Things to make the car even better. Earlier, I talked about the ability to scan markets for other opportunities. One of the challenges I always have when I'm trading is real estate, right? I only have so many screens, and it's a little overwhelming if there's too many screens. Having some kind of scanner gives you the ability to be able to watch other markets, if you will, but not have to have them fill up all your screens. So we have a customized version of a market scanner from NinjaTrader. And what that does is you can see the eagle, falcon, and hawk. It's showing what's going on in other instruments, but in a nice compact window. And so again, it comes down to just software doing the job better than if you had to do it yourself. It's, you know, it's not magical, it's just really good design. So Trade Forecaster, this is an interesting product. When it was first brought to me, I was like, okay, what is this? But it's turned out to be fascinating. So it's built on the premise that the market repeats itself. So if you don't believe that the market repeats itself either during the day or over a number of days, well then you don't really need a tool like this, okay? But you'll see after you've been trading for a while that because the market's, you know, based on human behavior, even the machines that are now hyperactively trading, they're still designed by humans, that the market tends to repeat itself. And so the premise here is that if we looked backward in time, let's say 60 days, and we aggregated the market activity from those prior 60 days, and we projected it forward and say, if the market was to repeat itself as it did 60 days ago going forward, what would that look like? What could one, quote, expect? And I liken this to weather forecasting, right? Under these similar conditions in the past, we've seen rain, right? So the same idea is here. Under these similar conditions in the past, we would recommend scalping at this point, right? With the understanding that the trending conditions will be approaching based on past experience or past activity. In this case, 25 minutes, and then it goes 24, 23, etc. So I wouldn't base my whole trading philosophy on this concept, but I think it's great for giving you just a kind of a macro view to enhance whatever trading system you're trying to use. So Day Ranger, this is another product that very popular, and again, it's one of these examples where it's just about keeping it simple, keeping it clean. And so this just is a tool that just sits in the corner, and even though it's not sexy, it's incredibly useful, right? And so what it does, and I believe there are other tools like this out there, what it does is show you the average range, either for today or 5 days back, 10 days, 30, as it may be. And what this gives you is insight if you're about to bang up against the border or the edge of a range. So let's say you get a trading signal and you're at the edge of a range, odds are you shouldn't take that signal because it's probably going to be a strong area of resistance. Or maybe you have a position in play and you start to sweat it out and you're wondering, should I stay in this position? Well, if you get a sense of where you are in the average range, you may have some room to breathe and let that thing run. And so again, this is the kind of tool that just sits in the corner, very simple, but very useful. All right. Well, then I thank you all very much for being with us today. And you have my email address, as I said. You are more than welcome to contact me if I didn't get to any of your questions, or if you want to go into any of the stuff in more detail. Love to talk. And, I'll help you any way I can. Thank you.